Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. At the onset, let me tell you, on behalf of my team, that we are listening to you. And we often tell you to write to us on the comments section to tell us what you'd like to hear on the show, and quite a few of you have written in. We've taken note of all of this, and we will take up all of those suggestions over the course of the coming days. Today's show, though, is about multi-cap funds. I was looking back, and the tendency is to forget these things, but it's been about 5 years, give or take a few months, since the new category of actively managed equity schemes was created. It used to be called multi-cap, of course, but then the definition was different back when the recategorization of equity schemes took place in 2017. And then it was felt by the Securities and Exchange Board of India that mutual funds were not being true to label, and so they decided to have a split of the multi-cap category into Flexi Cap, which is do anything based on what the fund manager decides to do. They could invest in a large cap or mid cap or small cap based on what they thought was appropriate, and multi-cap required a specific allocation, as you probably know, but I'll reiterate anyway so that you're aware. 75% split in 3 parts between mid-cap, small cap, and large cap, and the last 25% is open for the fund manager to allocate based on his or her requirements. Now, it's been 5 years, and there's quite a bit of assets under management for the category as a whole. The question we're asking today is, how has this category done? Has it done what it promised to do? And how should you invest in it now in this market that has been consolidating for a year plus? Joining me today is Prableen Bajpai, the founder of FinFix. Prableen, thanks so much for taking the time, and pleasure speaking with you. Let me ask you that first. It's a category that has grown quite substantially. Where does it stand right now, and how many schemes are there?
Right. Hi, Alex. Always a pleasure to be on your show. Absolutely. So the birth of this new format of multi-caps was in 2020 September, when SEBI came up with the new definition that you have to put 25% in large caps, mid caps, and small caps at all times. And at that time, all these major funds, Alex, which existed, actually moved to a newer category, which was called the Flexi Cap, which came up in November of 2020. So from 2020 September to 2020 November, this period was when these two categories came up. And out of all the existing funds, which were then there in the multi-cap space, roughly 3/4 moved to the Flexi Cap mandate, which was that you can just invest anywhere and invest 65% in equity. And here, of course, we have the mandate of 75% in equity at all times. And very fewer schemes were left behind in the multi-cap space. Now, since then, a lot of new schemes have come up, and today we stand at roughly 32 multi-cap funds are there, with a total AUM size of 2 lakh crore. If you're comparing it with the Flexi Caps, that has 41 schemes, and the AUM size is more than double. It's close to 5 lakh crore. So, of course, in terms of the size, multi-cap space is now newer, younger in the new format. And majority of the schemes, because they moved into the Flexi Cap space, we still have most of the schemes which don't have a track record of 5 years, actually. So a lot of good performing schemes in this category are 3 to 4 years old, 4.5 years old. And but I think it's a great space. It's an interesting combination where you have a mandate of compulsorily having allocations to the 3 market caps, and I think definitely it has to be on the watch list of investors.
Certainly, and just to drive home that point, you've pointed out Flexi Cap funds as of the end of August had close to 5 lakh crore of assets under management. The largest category, of course, is the sectoral and thematic category, which is just over 5 lakh. Flexi Cap is the second largest, and so therefore, if you compare it with that, it's still a pretty large amount. 2 lakh crore is nothing to scoff at or nothing to sneeze at. So let's talk about how these schemes have done, particularly because of the kind of trends we've seen in the broader markets, Prableen. We saw at the start of the calendar year, markets fell quite dramatically. I'm talking about the broader markets, and then they recovered all of that lost ground, and they've been more or less range bound since then. So this is something that would definitely affect a scheme category that mandatorily has to invest at least 50% in small cap and mid cap?
Yeah, absolutely. Alex, because, we are comparing almost like it's always a constant comparison between flexi caps and multicaps. And we know that multicaps have to invest this 50% in mid caps and small caps. So it's a very interesting trajectory that we've seen, especially as compared to flexi caps, how the movement has been, especially during the downturns. But just to give you a broader view of how, and to your viewers, how the markets have been roughly since the start of this year and, of course, last September onwards. So I think last September onwards, till now we are in October, it's been quite a testing time for investors. And we saw from September last year till roughly 4th of March this year, we saw the small caps fall by roughly 26%, mid caps index was down by 21%, broader Nifty 50 was down by 15.5%, 500 was down by 18%. And then we saw some recovery from March till about end of March. So, beginning of March till end of March, we saw some recovery where the small caps and mid caps actually rose by close to 9 to 10%. And then gradually again from end of March to early April, we saw a fall in the range of 6 to 7% across these indices. Overall, Alex, where we stand today, year to date, if we are looking at the large cap index, we are up by 6%, mid cap 4% up, small cap we are negative by 3%. Now comes flexi cap. We can consider Nifty 500 as the commonly used benchmark, and for our multi caps, we can use the Nifty 500 multi-cap 50 25 25 benchmark. So both these indices year to date, the 500 index is up 4.5%, but the multi-cap index is negative 0.7%. And in the last 1 year, of course, the multi-cap index is again negative close to 2%, but the Nifty 500 is up by roughly 1%. So in terms of indices, that gives us an idea of how the multi-cap funds would perform during this time period. But the performance is really mixed, because I feel that during this period we've seen some multi-cap funds really hold and deliver decent returns. At the same time, we saw some flexi caps which have really fallen quite a lot. So roughly amongst the available multi-cap and flexi caps, we saw that year to date, the best performer has been a flexi cap fund with roughly 10% returns. And currently, if you're looking at the best performer for year to date, now, of course, also to tell your viewers that year to date returns are no ways an indication that you should go and invest, but this is just to give a perspective of how they have performed. So the best performer till now for the multi caps has been roughly close to 7%, 6.98%. And if you're looking at the worst performer, Alex, this is where it gets interesting. That the worst performer amongst flexi caps and multi caps actually has been a flexi cap fund, negative 15.87%. But the worst multi cap has been negative 4.12%. So I think that the performance of these two categories goes really beyond just having this broader structure. I think it's so much to do with how these funds are managed, and that is why we see this stark difference of almost 10% fall, which is for the worst flexi cap fund as compared to the worst multi cap fund year to date.
And we'll talk about a few of these and the strategies that they have employed that has helped them achieve what they have. But I'm wondering, in this current situation where arguments are still being made, Prableen, that the broader markets are overvalued, that while there are pockets of opportunity, there are situations where valuations are simply not justified because earnings have not really panned out the way that people had anticipated. So in this context, what is the kind of allocation that multi-cap funds currently have?
So multi-cap funds, Alex, we've seen that, of course, they are mandated to have this 25, 25, 25 all time. So what they're left with is a 25% free space where they can either add that allocation towards a large cap or a mid or small, or hold cash. So broadly, the trend has been that the mid cap and the small cap allocation has remained close to this 25% mark. So it goes up to 27, 28, slightly higher. But together, these two has been around 55%, not really exceeding 55%. But the large caps has been in the range of 40 to 45%. So there is stability, which this 40 to 45% brings in, because that's the large cap allocation. And I think fund managers have not experimented or taken a very, very high allocation towards the mid and small caps because they also understand that that balance between these different market caps is required. So broadly, if we speak, from these different 32 schemes which are available, what we see is that the 25% mark is taken and pretty much maintained by a lot of fund houses, and it's just about 3 to 4% above that what they're going in the mid and small cap allocations. And of course some of them are holding cash, but the large caps is roughly 40 to 45 is the usual trend.
So overweight on large caps, and that's pretty understandable in the current context. I think in any case, the flexi cap category has had the tendency to have more large cap, and the ones that I think might have underperformed would be the ones that have had the allocation towards the broader markets in a more aggressive manner than their peers. We'll get into some of those details. I would love to hear some of the scheme names that you've identified. But let's talk about the fact that 5 years, and you've pointed out that not all of these schemes have a 5-year track record, but I'm just wondering whether the forced allocation towards the broader markets has resulted in a significant outperformance for the schemes that have a slightly longer term time frame, and whether or not therefore it makes sense at this point, even though you've had an underperformance for a period of a year, relatively speaking, to allocate towards multi-cap.
So in terms of performance, Alex, let's just see, in 3 segments, the number 1 would be the SIP returns, the number 2 will be the rolling returns, and of course the trailing returns. So we can start with the SIP returns for the index. So Nifty 500 and multi-cap index, what we are talking about. So over a 5-year period, the multi-cap, the 50, 25, 25 split has delivered roughly 18.76% SIP returns if we were just tracking the index. And Nifty 500 over the last 5 years has given us roughly 15.5%. So it's an outperformance of 3% there. That's for the index. Now coming to how the SIP returns have been for the multi-caps. So if you're looking at the multi-caps alone over the 5-year period, whichever schemes are available, so out of the 32, only 8 have a track record of 5 years actually. And out of these 8, Alex, it's very interesting that the maximum returns, SIP returns over this 5-year have been about 23.8%, and the lowest has been roughly 14.8%. Now we should actually compare it with the flexi caps. So within the flexi caps, where we have roughly 24 schemes with a 5-year track record, the highest has been 23%. So the highest returns actually from the schemes is almost the same, so 23% roughly. But the lowest from the flexi cap is about 11%. So the lowest was much below what a multi cap is going. So the worst performer. This is in terms of the SIP returns. That's number 1. Now let's go to rolling returns. If we are judging them on the basis of rolling returns, which is the ideal way to see how schemes have performed, but now we are looking at 2-year rolling period over this 5-year period, because if we go on a 3-year rolling, then very few data points actually come up. So if you're looking at the multi-cap, then the best performer is given us roughly 31%, but the flexi cap best performer also has given us in 32% returns. So again, strong competition among the toppers from both the categories. But when it comes to the worst performers, in terms of rolling returns, the multi-cap, the worst performer has given us 21%, but the worst performing flexi cap has just given us 16%. So there's that gap of 5% there, Alex. So in terms of rolling returns, flexi caps fall. The worst performer is really at just about 16%, half of the top performing flexi cap. And the third criteria is, of course, the trailing returns, which majority investors see and what is available on majority of the websites as well. So if you're looking at the multi-caps, even today, the 5-year returns from the available 8 schemes is at 31%. So the topper is at 31%, quite good. And the lowest from this space is at 21%. So not too bad, I think, given the current times with the kind of dull returns we've seen over the last 1 year, 21% for the worst multi-cap performer. Now, in comparison, flexi cap, the best performer is at 27%, and the flexi cap, which we can assume that is usually tilted towards the large cap, has given minimum, the worst performer has given roughly 15.5, 16% returns. So that's again a sharp fall. So, in conclusion, I would say that in terms of returns, I would say that the difference between the best and the worst performers for multicaps has been lesser as compared to flexi caps. And although there is no conclusive, we cannot conclude, Alex, that multicap will always outperform. It definitely boils down to the fund management, but I think there's decent potential if you have a 6 to 7 year view that you can hold a multi-cap and it can give you decent returns, especially as compared to a flexi cap.
And especially if you're looking for a diversified fund, because
Yes.
if I remember correctly, and if my data is not wrong, then particularly over the last 1.5 years, large cap funds have increasingly been able to beat their benchmark, right? And I think that would also be in evidence in the large and mid category, which to a large extent flexi cap funds will be comparable to because of the kind of tendency that they have in the allocation towards large cap. But I want to talk about a few of these schemes that you have identified, and there are not many that have that 5-year track record from the multi-cap category as well. What has worked for the best performing schemes? Because this is a stellar return, right? If you're talking about even the SIP return of what, 24% or thereabouts, what have they done well? And who is it?
I would pick two schemes, Alex, one from the multi-cap space and one from the flexi-cap space, where I feel they're giving tough competition to each other. We know that HDFC from the flexi-cap space has done quite well over this time period. We saw them have a very high allocation towards the PSUs till 2022. There was a change in the fund manager, tilt towards the growth strategy. I think what worked for the flexi cap was really active management in terms of the right exits, the right fund stock allocations, and that's really worked for the scheme. Although they're like largely large cap tilted. In terms of the multi-cap, I would, few names like Nippon multi-cap comes up because also it is one of the original multi-caps which continued as a multi-cap. So I would, talk about the Nippon multi-cap. And I think they have never exceeded this 50 to 55% overall in terms of having the small and mid cap allocations. They've been very, very disciplined, I would say, with the kind of strategy that they follow. And this is what they followed even earlier. So for them, I think is also the expertise that they've been managing this slightly higher allocations towards the small caps and mid caps, Alex, through these years over the years. So it's not a new strategy that they've come up with. They were as just following this sort of a structure even before this restructuring actually happened. And I think it's the expertise of how the fund is managed in terms of a few ratios. If we see both HDFC from the flexi cap and Nippon from the multi cap have a very good upside capture. They both have an upside of 102, which is like really high. I won't go into the points, very minor difference there. But of course, on the downside, we've seen that HDFC can hold better. The multi-cap hasn't done that, slightly lower as compared to it has fallen more than the flexi cap. But I think overall it is the fund management style, Alex, which comes on the top. So the winner is really not which category. It is how the fund is managed. That is what I would conclude. So whether you should pick a multi-cap or a flexi cap really depends on which fund you're planning to go with. And over this 5-year period, I feel so many new interesting strategies from the multi-cap space have come up. We've got Kotak, we've got HDFC, we've got SBI, all of them. We've got Motilal. So many of these names are there in the multi-cap space. And I think, each one has its own style, and we'll have to just give it a little more time. But your time has to be at least 7 years plus if you're planning to invest. And one little thing here that I feel in the multi-cap space, one benefit for investors can be that there is lesser risk of duplication, because when you're picking a flexi cap, you really have to deep dive and see that you're picking the right flexi cap, because usually a large cap is already present in the portfolio. So I think multi-cap with this compulsory allocation can bring in some sort of real diversification in the portfolio and benefits you even if you're not holding a small cap separately.
Since we've been speaking about multi-caps, let me close out this conversation by asking, you've named a few names of schemes that you've said have worked for whatever reason that you've mentioned. But to close out this conversation, you generally have the tendency to prefer schemes that have a longer track record and that have been consistent over a longer period, rather than schemes that may have a shorter track record but could have done better on the return track record. So therefore, what are the schemes that you like in the category?
So in terms of multicaps, Alex, I think Nippon stands out. ICICI is good. Amongst the slightly recent ones, which have a 4-year kind of a track record, would be Kotak. I think it has a very interesting construct of the portfolio at this time, very less overlap with Nifty 50 and the large caps as well. And HDFC Multicap has done well. So these are the promising names. I would also say SBI. So SBI also brings in that value and growth mix kind of a strategy. So I think these are some of the good names. And I think, I've said this earlier on your show that if you're holding a large cap index and if you're holding a small cap index, a mid cap index, then I think having an actively managed multi-cap fund works well, because it can bring in that active management into a passive portfolio and make it more complete.
Absolutely. You said it in the strategy that somebody should employ. Of course, again, I'm telling our viewers they can write into us with specific questions about schemes or otherwise about investments that they're making. Prableen, thanks so much for joining us today. It's been an insightful conversation.